If you have a 9-to-5 job and you're trying to trade stock options, but you can't be on the charts when the market is open, like for the whole time, there's this one feature on Charles Schwab ThinkorSwim that I think could be a big difference maker. And in this video, I'm going to show you exactly what this feature is, and it's called the OCO bracket order. So I'm going to walk you through exactly what it is, how to use it, and why I feel it is one of the most important tools for part-time day traders, especially if you're trading options. The cool thing about the OCO bracket is that you can also use it when you're actually trading stocks. And I'm going to show you all of this in the video. Now, before we dive into the tool, here's the reality about options. Options move fast, way faster than stocks. So if you are about to enter an options trade, and then maybe you step away for a meeting, that contract can spike in value and you miss out on a lot of profit. Or it can drop hard, and if you're already in the trade, your losses are much bigger than planned. And most people don't have exits set either from a stop loss perspective and a take profit perspective because they're reacting to the trade instead of executing the trade. So how do you fix all of this without having been glued to the screen all day? Well, that's where the OCO bracket order comes in. And what OCO means, one cancels other, OCO. So essentially, when you enter a trade, what you do is you set a couple of things. Number one, you set your take profit. And also you set your stop loss all at the same time. And if one gets hit, the other gets canceled automatically. So that's why it's called an OCO bracket order. One cancels the other. So your trade is fully managed from a risk and a profitability perspective, even when you're not there. And this is really important because not all brokers make it that easy. I haven't really seen it on Robinhood. I haven't seen it on Webull. So being able to use this OCO bracket order on Charles Schwab ThinkorSwim is a big benefit and a big plus. And that's why I recommend ThinkorSwim as the platform you should be using to trade. So the reason why I'm a big fan of the OCO bracket is that it handles your exits and sometimes even your entries automatically. Number two, it removes the emotion from your trading. So there's no hesitation, no second guessing, because you define your exit points beforehand. And it also forces you to manage risk, which is the third reason why I like it, because risk management, if you really think about it, is the only thing that we really control when it comes to trading. So your ability to set your risk from the get-go is a big game changer. So with that being said, let's hop into Charles Schwab ThinkorSwim and let me show you how you can execute an OCO bracket order. Okay, so if you have a 9-to-5 and you can't really be looking at the charts and you're trading view all day and you want to still trade options, the OCO bracket is one that I would recommend. So if you hop into Charlie Schwab, if you come into your options chain, you can come over here, right click and say buy custom, and you can see with OCO bracket. And remember, OCO basically means one cancels the other. So if you click on it, you can see over here, you do now have your OCO bracket. And as you can see on the buy side, we only have one order, but on the sell side, we have two orders, right? This is where the one cancels the other functionality comes in. Using this particular example, right? I'm going to be buying at 118. And then my first sell order is if I make $100 in profit, sell, right? So that's why this limit order is at 218. It's $100 over my buy price. So if this first scenario happens, the contracts go from 118 to 218, my stop order then cancels. And then obviously over here, I have my stop order. And realistically, I wouldn't put it all the way to 18. Maybe I can put it to like 88. So I'm risking maybe like about $30 on the trade. So if I lose $30, the stop limit would automatically sell, meaning that my take profit order 218 would then cancel, right? So one cancels the other. So if the options contracts drop to 88, my 218 sell order gets canceled. If we get to 218 first, then my $88 stop limit order then cancels. Now, if you're ordering more than one contract, right? So let's say you're ordering 5. What you also have to do is you have to make sure you put 5 in there so that it kind of like matches. If this is kind of like your standard order where you're putting 5 at a time, you can actually save this as a template. So if you come here, you can see there's this like floppy disk like icon. You can click over here. You can literally save this as a custom template so that next time when you want to put your order in, you don't have to go through the process again. I already have some custom orders set as templates. So you can see I have this one for 10, I have this one for 2. So I'm just going to pull it out. So as you can see, this custom order comes in 10 contracts, 10, 10, and then it already has the parameters set, right? That's another way that you could do it. And for your trailing stop, because I normally like to do the trailing stop, you can also do it as a percentage. What you could then say here is if the price drops 10%, kick me out. And I actually like the trailing stop better than the stop loss, because what I don't want to do is, if let's say we go from 118 and we go to 150 and then we drop, I'd rather just drop the 10% right value from the market rather than waiting for it to drop all the way down to 88. But normally when I'm setting mine up, I just do it as a dollar value. So in this case, I would say if I'm trailing this by 20 bucks, if whatever the price is drops by $20, kick me out. So if we go, let's say from 118 to 168, and then we drop down $20 to 148, my trailing stop will get executed and I'll be able to lock in some of the profit. So that's why I prefer going with the trailing stop rather than the stop loss. So there are different exit options that you can take. So I like trailing stop, which is a cool feature. And then obviously you could do your limit order where you've done your calculation to say like, hey, I want to make $100 on this trade, or you can see yourself making $100. You can then put it in. If you want to be a little bit more aggressive, you can also change that. So that's how you set up the OCO bracket. Now, I'll just show you one more feature. And this feature is if you want to set your conditional order. So for instance, you can change it over here and say buy it at market, and you can maybe put a time. So normally I like to enter my trades after 9:45. And remember, if you have a 9 to 5, maybe at 9:45, you're going to be in a meeting. Normally I like to set the time for the order to execute. And if I've done my analysis and I'm really happy with the analysis, I can then set the condition. One of the things that I like to do is I would then do my analysis and say like, okay, if let's say price is greater or equal to, in this case, maybe 280, right? Or 285, execute this order at the market order, and the parameters for the take profit are already there. You might have to then play around with your limit order because you might not know what price the contracts will be at that particular time. So there's a way that you can also change your limit order to something that fits your trading style. So that's something else that you could do with your OCO bracket. Anyway, if you have any questions, let me know. I just wanted to walk you through how to put in an OCO bracket. It really suits someone who has a 9 to 5 because you're able to then set your trade and forget it. Ideally, I wouldn't really like to do the conditional orders because I like to watch my trades. But if you have to do the conditional order, I showed you how to do it. But this is great because look at your setup. You can identify the time you want to take your trade. And then once you take your trade, the good thing is you can then set your trail stop and your limit order, and then you can go and do your work. And you now don't have to worry about having to check to see how the trade is going and having to move stop losses and things like that. Hope this helps. Let me know in the comments if you have any questions. I'll see you guys on the other side.